Manager of Partnership Programs at the NFCC and your host for today's Financial Facts Chat. Thank you for joining us on Facebook and YouTube. We are glad to have you with us on a day when there's so much to talk about. If you enjoyed today's show, please be sure to like, comment, share with your friends, and subscribe. That helps demonstrate your support for nonprofit financial education and keeps this channel going. There is so much happening right now with the election, but we might try to cover the must-know items that are new and may directly impact people's finances. Things like where and how to find debt help as the pandemic continues to surge, what's in those new debt collection rules announced last Friday by the CFPB, and we might even talk about we might get into a little bit more about results from the election and the impact on personal finance. If you have questions, please go ahead and enter them in the chat, and we will get to them as time allows at the end of the program. To provide some insight on all the topics we plan to cover, I'm joined once again by Bruce McClary, SVP of Communications for the NFCC. How's it going today, Bruce?
Pretty good, Rachel. How are you doing?
I'm pretty good, thanks. Yeah,
good,
not
good.
bad.
Yeah, it's been a little while since we've done this, and we haven't really communicated directly a lot either. We've both been so busy, so it's good to be with you and spend a little bit of time chatting about some of these really important topics that we have on deck today. There's a lot of uncertainty right now about a lot of things, so anything that we can do to bring clarity, especially when it comes to the financial advice that we have to give and some of the info that we're going to share about the new debt collection rules and some of the lifelines that are still available for people who are struggling financially. That's good. Any clarity that anybody can bring to anything today, I think, is a plus, right?
Absolutely. Yeah, that'll be great.
Yeah. So just a quick reminder from me to the people that are watching, though. If you do have a question as we go along through these topics, because debt collection is a really big topic, and there's probably a lot that you may want to ask, you can enter your question in the chat feature. We'll keep an eye on it. Rachel will be keeping an eye on the chat. I'll be doing the same thing. And obviously, when we get to the topic about the COVID relief programs that are available for debt and what's still there and what's not, you may have some questions about that as well. Please utilize the chat function, ask your questions as we go along, and we'll get to them at different times through the program. And one point as well that I want to mention, if there's anything that we don't have time to answer, or aren't able to answer directly, we'll try to somehow publicly provide answers, whether it's on our blog page. We might find an interesting topic that you bring up that we can address, or use social media to do that too. So I don't know. With all that said, Rachel, let's get started.
Sounds great. With so much going on, what do you think you might want to tackle first today, Bruce? Maybe a little bit about how personal finance might be impacted by the election outcome today?
Yeah, actually, that's a good topic. And I saw a couple of bloggers try to address that yesterday on LinkedIn, and they were being more predictive about the outcome of the election. That's not my place. I don't have a crystal ball. Sorry. I can't tell you what's going to happen. I can only say there's going to be a winner and there's going to be a loser. And we'll find out soon, but I can't tell you who that's going to be. But what we can do is we can have a discussion about the stated policies of each candidate and look at what they've proposed and let you know at least what you might be able to reasonably expect after the election results are final, and once the new administration begins or the current administration continues, so that you know what might happen and what may not happen. And I guess we can start with the topic that is really on everybody's mind, and that's the economic policy, jobs specifically, what each candidate has talked about in terms of job programs and what they will do and what they won't do, because COVID-19 has been a tremendous setback for the economy, and it has caused high unemployment levels. People are underemployed. It's very similar to the Great Recession, but very sudden and significant in its initial impact. But the good news is that each candidate has a plan that they've announced for continuing job growth in the future, which is going to be a key element of the recovery. And I guess we'll start with the president, and then we'll talk about former Vice President Biden. With the president, he's really taken an approach that looks at stimulating job creation by decreasing costs and regulations for businesses. And there's the Tax Cuts and Jobs Act of 2017 that's an example in this area, significantly lowering the corporate tax rate. So it's likely that those kind of that sort of approach to stimulating the economy will continue to be an underlying principle in anything that's done in a continuation of the administration. The other thing is what hasn't been done, but what's been talked about or kicked around by the administration. And they in 2016, there was all this discussion of $1 trillion infrastructure plan. Well, that plan really never came to fruition, and the details never were really released. But if there is going to be some kind of an infrastructure plan that is resurrected from those initial comments back in 2016, it's likely that it's probably going to include some job aspect in that, since it does deal a lot with updating highways and bridges and railroads, et cetera. So that's another thing that you might want to keep an eye out for in a continuation of the current administration, if that actually happens. Essentially on the job front, though, the administration has stated that it's going to create 10 million new jobs over the course of 10 months with 1 million new small businesses, and bringing back about 1 million manufacturing jobs from overseas. But again, details are not all there, but at least that's the stated goal. Now, with former Vice President Biden, we've all heard the Build Back Better program. That's essentially a program for recovery that he has put forward. There is a significant jobs element to this. The jobs plan is tied in very closely with the public health aspect of this, and creating jobs as a part of this will also involve jobs that help fight against the pandemic, as well as maybe public health job corps in some way. But in the long term, the focus is on manufacturing, energy, and infrastructure. And his stated goal has been bringing millions of good paying jobs to Americans and focusing on buying American products, creating American goods, and producing American services, and less reliance on foreign trade. So more to come from both of them, I'm sure, depending on who wins the election, but that's at least the jobs piece. And then on the higher education point, because student loans are often a topic when you talk about political candidates and their platforms. In terms of the president, the administration rolled out. They launched a tool for prospective college students to look at the cost of different schools and their earning potential and make informed decisions about what the most affordable pathway to a degree and ultimately to a career may be. And that's called the College Scorecard. And on the federal spending front, in terms of higher education, there have been positions raised by the administration where they project that they will cut funds for higher education to the tune of about 170 billion or so, and that could impact the amount of financial aid and the availability of financial aid for those who are seeking that through the Department of Education. Or qualifying students and those who attend public universities and historically black colleges and universities, or institutions that serve minority populations would have their loans completely wiped out in some fashion, details forthcoming. So that's some of the position there from the two candidates. But I would encourage you, if you want to know more about this topic and you want to know more about what the candidates have proposed and what the next 4 years might look like, depending on the outcome of the election, I encourage you to go to nfcc.org, visit our blog site. We have a little bit more detail in a blog that was posted just prior to Election Day, and it kind of gives you a sense. But again, we're not taking political sides on any of these issues. We're just putting forward what has been said in the public discourse by either of the two campaigns, and then you can kind of get an idea of what direction things may go. And then the other caveat here, as we know, and this is really specific to all sides of the political issue, if something is promised during a campaign, it's not a guarantee it's going to happen. So the things that you see here that one campaign said or another, don't count your chickens before they hatch. That's a tried and true saying, and I'd say it here too. But at least this sets expectations. So the next 24 hours, 72 hours, 100 hours, we may be waiting to find out what set of plans will go into effect. But this is definitely something you can read before we find out who the winner is, for sure.
Thanks, Bruce. Very insightful. Beyond the results of the election, we still have the pandemic surge that we're dealing with. And as it continues to keep many people out of work and unable to pay their bills, I've heard that there are some relief programs that have somewhat recently gone away. Can you talk about what options are left and what kind of resources people could use to still get help?
Yeah, this is an issue that we're hearing a lot of, and people have questions about whether or not there are any of these COVID-19 credit relief programs that are still left. If we go way back, it seems like 100 years ago, but if we go way back to March and April, when the shutdown started and industries started to lay off workers and people were asked to stay at home for weeks and weeks and weeks, that led to this sudden spike in unemployment and led people to a lot of hardships pretty quickly. And if you remember the year before, in early 2019, it was January of 2019, when we had the federal furlough, and you had federal employees that had to go for weeks and weeks without a paycheck. One of the things that really put the spotlight on was how unprepared people were with emergency savings to sustain themselves over prolonged periods of unemployment. And we found that a lot of the furloughed federal workers ran out of their reserves within a matter of a couple of weeks. And the same thing happened here for a lot of families. So there were people who were already just 2 weeks into a layoff, struggling with whether or not they were going to be able to pay their credit card debt, whether or not they were going to be able to pay their mortgage, whether or not they were going to be able to keep up with their student loans. So on the credit card side, a lot of the credit card issuers rapidly moved programs into market that would help deliver relief to people, so they wouldn't have to make a payment for 2 months or even 3 months, and they wouldn't be penalized for skipping those payments. So it could preserve people's credit health, and it could also give them a little bit of relief in their wallet on the bottom line. So those programs got a lot of attention. And again, I want to point out, those were temporary hardship programs. So they were not long-term solutions. They were just getting people over a very difficult period of time and giving them what was hoped would be enough time to get back into the marketplace, to get a job, or to find lifelines that could restart their income so they could resume paying the debt at the end of those programs. And there were, I will say, compared to the Great Recession in 2008, 2009, the response from lenders, banks, credit card companies was so much faster and so much more impactful. So there were a lot of lessons learned from those years that actually helped us in this situation. Of course, technology has improved, and so those programs were able to stand up and get into the marketplace pretty quickly. That being said, we are now far from April and May, and we're about to head into to the new year. So the programs that were put into market back in April and May, some of them have termed out. Those creditors are no longer offering those programs. But some things have not changed. There are still millions who are unemployed. There are still millions who are struggling with other debt that they owe, whether it's housing, whether it's even student loan debt, even though the federal student loan debt forgiveness program is still in effect until the end of the year, allowing people to skip payment. A lot of people have private student debt. That is still an issue for a lot of people. Utility payments, other things that they have, car payments. So there is still a need for relief programs, but again, some creditors have pulled the temporary hardship programs out of the market. So the question that you're asking is, what is left? What can people do? And I'll start by talking a little bit about what people can do to find temporary relief for their credit card debt, and also identify solutions that might be a little bit more long-term. There are still some creditors who are offering payment deferment programs, and the payment deferment programs will, typically they're about 2 billing cycles, and they give you the opportunity to skip a payment without penalty during those 2 months, which puts that money right back in your pocket. Those are only, again, they're very limited, so they're not long-term. But if you think that your issue is only going to be for a couple of months, that might be a solution. And one example of a creditor that's offering that program right now is Wells Fargo. But the thing that you have to remember is, and this is important, communication is your best tool when you don't have any money. So you need to reach out and be proactive in contacting your creditors and having the discussions. So if you just have, if you want to know what your creditor is offering, reach out and ask them what program is available, and they will tell you. Other creditors are offering temporary hardship programs that'll reduce your monthly payment and your interest rate over a short period of time. Those are programs that were in place before COVID-19. So they're not on the menu, they're off the menu. You have to call, you have to ask for those programs, and it's always better to be proactive before you're in a state of delinquency to go ahead and ask for that kind of relief, where you can try to find either a little bit of payment reduction, interest reduction over a temporary period, or find some kind of special assistance to help you with the payment. But here's the thing, if you've got a lot of creditors, and nobody just has one credit card anymore. Usually people have 2 or 3, 4 or 5, or even 6. The process of reaching out and contacting those creditors it's time consuming, it's stressful, it's not something that's going to be very easy. So the recommendation that I would have for anybody in that situation is to reach out to a nonprofit credit counseling agency. And the benefit of doing that is really twofold. Number one, you're getting advice from a financial professional, and the initial contact that you have with the credit counselor is free of charge if you're working with a counselor from nfcc.org. If you go to nfcc.org, you connect to the counselor, you have that consultation, they'll review your budget, and they might provide some recommendations as a part of an action plan that you hadn't thought of before. It's very difficult if you're stressed out about your debt and you're down in the trenches in the fog of war to come up with all kinds of different options that may work for you. And so that's why it's good to have a different perspective looking in on that, especially someone with experience guiding people through the same challenges. They know how to look at the situation and identify reasonable pathways for you to find a way out. And so that's very important. So you're getting a tremendous benefit there. And if you need long-term solutions that go beyond the temporary band-aids that the creditors might be able to put on your debt, your past due debt, then a debt management plan is something that a nonprofit credit counseling agency can recommend that might work for you as well. And that's a long-term solution that helps you more affordably repay your debt, typically between 4 and 5 years, giving you the advantage of a significantly reduced payment, reduced interest rates, and the elimination of late and over limit fees. So that's one of the advantages. So instead of going out and trying to figure out what's going on with the hodgepodge of programs that are being offered by different creditors for temporary hardship, make the first call, talk to, or go to the website nfcc.org and talk to a nonprofit credit counseling agency that can at least help you level set and understand your options before you take the next step. And if your next step involves trying to more affordably repay your debt, then that's a step that they can assist you with further as you go down that road. But the other thing I want to say about these hardship programs, the federal student loan payment relief program is still in effect until the end of the year. December 31st is when it's expected to end. That essentially gives anyone with federally backed student loans the opportunity to skip a payment. They don't have to call up and ask for it. It's automatically there. So they can skip a payment if they want, and they're not charging interest on those payments that are skipped. And that's a tremendous advantage if you need a little bit of relief in your budget. But the word I would give to people who are taking advantage of that is you better keep an eye on the end date of that program, because at that point your payments are going to be due. And if your budget is not where it needs to be able to afford the resumption of payments, you need to reach out immediately and try to get help and try to find some longer term solutions there. And the federal Department of Education has affordable repayment programs that might be a good fit, but you don't want your student loan debt to fall behind before you figure out what those affordable options are. You should be having those conversations now. That's very important. And of course, the other piece of this ends up on the mortgage side. There are programs that are giving people relief on their mortgage payments that have people who have federally backed mortgages can benefit from those programs. So if you haven't taken advantage of it yet, and you find yourself just getting into a hardship situation, those programs are still available as well through the end of the year. And for renters also, there are eviction moratoriums that are in place. The CDC announced guidelines, and there are renters in communities across the country are not only protected by the federal guidelines, but they're also protected by community guidelines and state guidelines that help protect them from eviction, at least during this period of time. But the big unknown there is what happens when those moratoriums expire. There are projections that say the average person who's been behind on their rent this year because of the COVID pandemic will get to the end of the year owing at least between $500 and $5,500 in back rent. Now, if you think about somebody who's struggling and doesn't have any income, $5,500 in back rent, it's not like you can just make that payment immediately. So there's going to have to be something that's announced, some kind of a plan that's fair to landlords and renters that addresses that situation and helps us move forward in the year ahead. So I think that's what we need to be keeping our eye on. But the relief programs are still in place, most of them at least through the end of the year. And we should keep an eye on announcements of any extensions.
Thanks, Bruce. That's really important information. I think, you definitely want to avoid having a huge lump sum payment due all at once that you're not really expecting. I did want to ask you a little bit about the CFPB Rule announcement and what that means for collection agencies and for consumers, because as you mentioned, millions of people have fallen behind on their debt payments and they're dealing with debt collectors. Could you share some insight into that?
Yeah, and just before I begin, I just want to let everybody know, first and foremost, I'm not speaking about this issue with a little bit of interesting prior experience that's related to it. I used to be a debt collector, so I know from my debt collection experience very intimately what these rules are and their implications on both sides. So just in general, I think it's probably a good idea to remind people about what rules are currently in place and then what was announced and when those rules are going to kick in. Because there is a little bit of time before they kick in. But there's something called the Fair Debt Collection. My tongue's getting twisted. We haven't even finished the program yet. The Fair Debt Collection Practices Act, the FDCPA, and that's the national set of rules, the nationwide set of rules on the federal level that are established that tell consumers how they're protected and debt collection agencies how they need to act when they're dealing with consumers. And it really sets the rules and the boundaries. And I think one of the most common things that people know about the FDCPA who are familiar with it is that it sets the rules about when and how often a debt collector can contact you, that they can't call before 8 a.m. your local time or after 9 p.m. During your local time. And they can't contact you at work if you ask them not to. And if you're represented by an attorney, they have to contact you only through the attorney. And they can't tell other people about the nature of their communication with you and the debt that you owe. People like your employer or neighbors or your family. And if you request that they cease contact, they have to stop. They also can't threaten you with violence or for throwing you in jail or anything like that. They can't repeatedly harass you with those kind of threats, and they can't call you and collect the debt without properly identifying themselves to you as debt collectors. And they can't publicly disclose in any way the nature of their activity trying to collect the debt from you or the debt that you owe. So they have to be honest about their communication, and that means they have to be honest about the amount of debt that you owe, and whether it is in what the consequences are if you don't pay. And they have to properly identify the company that they represent. So the first thing that I always advise people to do is, if you're contacted by a debt collector for the first time, you don't recognize what they're trying to do, you don't recognize the debt they're talking about, doesn't sound familiar, you have a right to ask for a verification of debt letter. And they have to provide that verification of debt within 5 business days. And that means they can't be calling you during that time, they can't harass you during that time or anything like that. Once you get that verification of debt, they provided that, that will tell you who they are, what debt they're collecting, all the information about it, showing that they have proof that you actually owe the debt. The other thing you should do is pull a copy of your credit report. If you haven't pulled a copy of your credit report recently, chances are there's probably information about that debt on your credit report if it is truly and legitimately yours. Now, if you've gotten a call from a phony debt collector, you should probably report them, and well, actually, you should absolutely report them to the authorities. You should report them to the CFPB, you should report them to the FTC, and you should also report them to law enforcement authorities. And one telltale sign that they're a phony debt collector is if you start indicating that you understand your rights under the FDCPA and you ask for the verification of debt letter, they may just hang up and scram. But if you have record of the call and other details about the number they're calling from, the time of day, it could be helpful for law enforcement authorities to track down a phony debt collector. But what you should never do is commit to paying immediately as soon as they make first contact without verifying who they are. In terms of the new rules, they're not going to go into effect until about a year from now. But the big thing about these new rules is it modernizes the rulemaking for debt collectors so that it recognizes digital communication, such as email, direct messaging, and social media. And social media has been getting a lot of attention in this new rule because people are now concerned that debt collectors will be able to hunt them down and communicate with them via social media. And a lot of people fear that that kind of communication could somehow be public, which interestingly is a violation of the Fair Debt Collection Practices Act, because you're not supposed to publicly post information about debt you're collecting so that others can see. So more likely, this is going to involve the direct messaging aspects of social media platforms, where you could get a message from a debt collector, say, on Facebook Messenger, or directly through a Twitter message, and other forms of one-to-one messaging, so it's not publicly viewable. But even Facebook needs clarity on this, because they've indicated in a public comment recently that they're working with the CFPB to try to clear up what exactly this means, that people will be contacted on social media. The one thing that I want to remind people is that there is an opt-out clause. If you don't want to be contacted via digital media, whether it's social media, direct text, etc., there will be a provision that is required where you're informed of your right to stop those communications. So you can push the stop button if you don't want to be contacted that way. But if you do agree to be contacted that way, there is no limit on the number of times that the debt collector can message you on those platforms. So you could be getting hundreds of messages a day. There's really no cap on that. So that's something that you should keep in mind when you think about this. It does give you control to stop the communication on digital platforms, but if you don't, you could be contacted in any number of times during any given day if you're if you leave that option open. So there's a lot to talk about on those things, but again, we have a year before they go into effect. Read and understand your rights to opt out of certain forms of communication, your rights in terms of when and how you can be contacted by phone or by other types of messaging. And when it goes into effect, just be ready. But for now, the old rules stay in effect through the FDCPA. And all the things that I talked about earlier are still in play. So the best advice I can give you is if you're being hounded by debt collectors, you don't have to go through it alone. Reach out to a nonprofit credit counseling agency and get help. You can get help at nfcc.org. They can talk to you and they can help you sort out the issues that you're having with the debt collectors and provide an action plan to deal with that, to get those calls to stop and to get on an affordable pathway out of debt.
Thanks, Bruce. That's great information. I think that answers all the questions I had, and I'm not actually seeing any questions in the chat at the moment. So I'm just going to thank everybody for joining us today. We certainly hope that this chat helps make you better informed to make better and wiser financial decisions. If you're watching this recording after the live stream, definitely don't forget to like, comment, and share. And I just wanted to thank Bruce once again for providing all that expertise. And thank you to all our viewers. We will see you guys again soon.
Thanks, Rachel, and thanks everybody for tuning in.